Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, October 19th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here the ES remains within a bullish uptrend. The PIMA pullback zone here, the trigger zone, has been bid so far. We looked for any push below 34.50 to be defended by bulls, and that's exactly what we've seen. However, in the last hour of Friday's session here, we did see some selling pressure, which led to a failed high right here. Price didn't close below the midpoint of the bullish rejection day, however. So for the most part, this market remains bullish, but is showing initial signs of potential weakness to come. If there's any failure to get above the 3,500 level, that could open up perhaps a retest down into the FOMC key level below 3,400 quarter. Overall, this market remains strong though, but keep an eye on 3460. A break of 3460 could be an early indication of weakness to come, although the market remains bullish at this time. All right, let's take a look now at the NQ. Now the NQ looks very similar here. We've seen a pullback into the PIMA trigger zone here. We saw the bounce that we were expecting, but in the previous session here, Friday, we saw a failed high. In the last hour of the day, we really saw this thing fall off, and that closed below the midpoint of the Thursday range. That's pretty significant here and would suggest that there could be weakness to come. Again, we're going to have to watch 11,860 here as an early indication of weakness. Below that zone starts to open up, maybe a bit more weakness down below, but really below 11,800. 800 has been the level. So keep an eye on that zone as it could open up a return back to the FOMC key level below. FOMC key level is 11,355s. So it took it bid here. If this is starting to see rejection and failed highs, then we may return back to that level ahead. So again, keep an eye on that. 12K above is the level that bulls need to get beyond in order to stretch this thing higher. All right, taking a look now at crude oil, you'll see that crude oil right now down about 0.2% and a failed high developing at the moment. So you can see 3-day highs right here, and price pushed beyond 3-day highs and is pushing back into the range. You can see resistance here and here and here ever since it went offered. Boom, boom, and boom. Now the one thing about selling from this level is that it's led to higher and higher pivots. The first one was the biggest sell-off. The second one was deep, but a higher low. Third one was more shallow, and here we are again. Again, what I've mentioned before is that this rejection here is pretty significant. We had a midpoint retest. If price can get through the 4150s, it really opens up some upside here that can take us into 43 to 44 above. But right now showing early signs of failure at the previous session's high, but still holding above the 40.80 level, which is the previous session's mid zone right there. A failure to hold that level could drop this thing down below and basically return this to the magnet of $40. 40 bucks has been a very, very clear magnet for price here. And if we're not going to get going to the upside, then we snap back to that. But right now, keep an eye on 41.50, because if it can get above that zone, it opens up some upside ahead. All right, let's take a look lastly at gold futures. Gold here showing a little bit of signs of rejection at the upper end of the day's range. Just fired off a sell signal in the hourly time frame here. So just fired that off here recently. But for the most part, that sell signal up here in the hourly time frame is above 3-day highs, and that could lead to a return back toward 1900. But for the most part, this one is stuck again. It was stuck before and then had 2, 3, 4 days of weakness here and then got stuck again. So really, this thing just continues to trade in a very chop range around the 1900 level. It's still holding the 1874.20 after our ideal buy zone was rejected there. So that means that as long as price holds above 1874, I'm still looking for a bounce toward 1981.70. Bears right now, though, keeping a lower highs in play, and 1926 continues to be the midpoint of the previous month's range, that remains a major resistance level. So we're fighting between two key levels. Above 1926 squeezes, below 1874 leads to liquidation lower. So right now, still inside that chop range until proven otherwise. All right, that is it for now. We'll see how this develops heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.